Greetings, you've tuned into Investor Web, the go-to channel for financial wisdom and investment insights. Here we untangle the complexities of the financial world, offering reliable, easy-to-understand and actionable investment advice. Our coverage spans a spectrum of topics, from the ebbs and flows of the stock market, the lucrative realm of real estate investments, to the untapped potential of emerging markets and beyond. So strap in and prepare to boost your financial IQ. Today we embark on an exciting journey to uncover easy ways to make $1 million in 2024. The $1 million dream may seem daunting, but remember, every journey begins with a single step. Now let's break down this $1 million dream into bite-sized, manageable steps. The first thing we need is a clear financial goal. Yes, we're aiming for $1 million, but it's not enough to just have a number in mind. We need to know why we want it, what we're planning to do with it, and when we want it by. This goal should be as tangible and as specific as possible. Next, we need a solid plan. This is where we map out our journey towards our $1 million goal. Will we be investing in stocks, real estate, a combination of both, or perhaps we're considering starting a business? Whatever the plan, it needs to be in line with our financial goal, and it needs to be realistic. Finally, and perhaps most importantly, we need the discipline to stick to our plan. There will be bumps along the road, there will be temptations to deviate from the plan, but remember, discipline is what separates the dreamers from the achievers. It's what keeps us on track even when the going gets tough. The $1 million dream may seem like a mountain from afar, but when we break it down into smaller steps, it becomes a series of manageable hills. It's not about the destination, but the journey. And with the right approach, the $1 million dream is not just achievable, but also manageable. In the pursuit of $1 million, investment opportunities become your stepping stones. Let's start with stocks. Stocks are essentially shares in a company which can increase or decrease in value based on the company's performance. The potential returns can be high, but so can the risks. It's like a roller coaster ride, exhilarating but unpredictable, yet with careful research and patience, it can be a profitable venture. Next, we have bonds. Bonds are like IOUs issued by organizations, typically governments or businesses, promising to pay you back with interest after a certain period of time. They're generally seen as safer than stocks, but the returns are usually lower. It's like a slow and steady race where the tortoise often wins. Mutual funds, on the other hand, are a collective investment scheme, pooling money from several investors to invest in a diversified portfolio of stocks, bonds, and other securities. The risks and returns vary, but the beauty of mutual funds lies in their diversification, spreading the risk across a variety of investments. It's like a potluck dinner where you get to taste a variety of dishes. Real estate investment is another avenue. Whether it's buying a property to rent out or investing in real estate investment trusts, the potential for high returns is there. But like any investment, it's not without risks. It's like building a house where the foundation is crucial and patience is key. Lastly, investing in small businesses. This can be a rewarding opportunity, both financially and personally. By providing capital to a small business, you're helping it grow while also standing to profit from its success. However, the risks are high, as many small businesses fail within the first few years. It's like planting a seed, where nurturing and patience can lead to a bountiful harvest. Choosing the right investment opportunities is crucial in paving your path to $1 million. The secret weapon in your $1 million journey? Compound interest. Think of compound interest as a snowball rolling down a hill. At first it's small and unassuming, but as it rolls, it picks up more snow, growing larger and larger. This is the essence of compound interest. The interest you earn on your investments isn't just added to your initial principal, but it also earns interest itself. Let's imagine a scenario. You invest $1,000 at an annual interest rate of 5%. After the first year, you've earned $50 in interest, bringing your total to $1,050. Now, in the second year, you earn 5% not just on your initial $1,000, but also on the $50 you earned in interest. This means you earn $52.50 in the second year. This process continues year after year with your interest earning interest on top of interest. This snowball effect can significantly boost your investment returns over time. It's the reason why the earlier you start investing, the better. Even small amounts invested regularly can turn into substantial sums over the long haul thanks to the power of compounding. So as you set out on your journey to accumulate $1 million, don't underestimate this powerful financial principle. Compound interest, rightly called the eighth wonder of the world, can be a game changer in your pursuit of $1 million. In the world of investments, diversification is your safety net. Picture yourself as a tightrope walker. With a safety net below, you're able to take calculated risks, knowing you have a safeguard in place. This is exactly what diversification does for your investment portfolio. Diversification is essentially spreading your investments across different asset classes such as stocks, bonds, real estate, and perhaps even cryptocurrencies. By doing so, you're not putting all your eggs in one basket. This strategy can help mitigate risk and potentially enhance returns. Consider this: you've invested all your money in one company's stock. If that company tanks, so does your investment. Now picture having your money spread across 20 different companies in various sectors. If one company underperforms, the others may still do well, cushioning the blow to your overall portfolio. Diversification can also provide steady returns in the face of market volatility. Let's take the example of an investor who has a diversified portfolio that includes stocks, bonds, and real estate. In a year when the stock market is down, the losses can be offset by gains in real estate or bonds. This balance can provide a level of stability even in turbulent markets. However, it's important to remember that diversification isn't a one-size-fits-all strategy. It's crucial to align your diversification strategy with your financial goals, risk tolerance, and investment horizon. For instance, a young investor with a high risk tolerance might have a portfolio heavily weighted towards stocks, while a retiree might lean towards more stable investments like bonds. Ultimately, diversification is an investment strategy that aims to balance risk and reward. By owning a variety of investments, you can protect against unexpected market movements and increase the potential for returns. Remember, diversification doesn't guarantee profits or protect against loss in declining markets, but it can help you manage risk and reduce the potential for losses. A well-diversified portfolio can be your anchor in stormy financial seas, helping you stay on course towards your $1 million goal. Making $1 million in 2024 may seem like a tall order, but with the right strategies, it's well within reach. We hope that the insights we've shared today have shown you that it's less about having a mountain of money to start with and more about making smart, consistent decisions. Firstly, we emphasize the importance of setting a clear financial goal. Remember, a dream written down with a date becomes a goal. A goal broken down into steps becomes a plan. A plan backed by action makes your dreams come true. So don't just dream of becoming a millionaire, plan for it. Next, we delved into the world of investment opportunities. We've touched on various avenues such as stocks, bonds, real estate, and even the burgeoning field of cryptocurrencies. The key is to stay informed and make calculated decisions. There's no one-size-fits-all solution, and what works best will depend on your individual circumstances and risk tolerance. Perhaps the most powerful tool at your disposal, though, is compound interest. Remember the story about the magic penny that doubles every day for a month? By day 30, you'd have over $10 million. That's the power of compound interest. The sooner you start investing, the more time your money has to grow. Even small amounts can add up to large sums over time, thanks to this financial phenomenon. Last, but certainly not least, we looked at the importance of diversification. As the old saying goes, don't put all your eggs in one basket. By spreading your investments across different asset classes, you can mitigate risk and increase your potential returns. Diversification isn't just about protecting your wealth, it's about maximizing it. In conclusion, making $1 million in 2024 isn't about finding a get-rich-quick scheme. It's about setting a clear goal, exploring various investment opportunities, leveraging the power of compound interest, and diversifying your portfolio. It's a journey that requires patience, discipline, and a willingness to learn. The future is full of potential, and the path to financial success is well within your reach. So equip yourself with knowledge, make informed decisions, and take action. The journey of 1,000 miles begins with a single step, after all. Don't forget to subscribe to Investor Web for more financial insights and investment advice. Here's to making your $1 million dream a reality in 2024.